Do you ever lie awake wondering if your money will ever work for you, not the other way around? What if I told you the richest people didn't win a lottery or time the market? They followed one quiet plan that turned years into freedom. If you want real, achievable change, subscribe now. In this channel, I'll teach you the advanced financial literacy most people never learn in school step by step. Simple and built to last. Stay with me, this could change the next 20 years of your life. Here's the twist most people miss. Wealth isn't made by big one-time wins. It's made by decisions you make today and never see again. Sounds boring? That's exactly why it works. Imagine two people. One obsessively checks stocks daily, panics at every headline, and chases the next hot tip. The other sets up a long-term plan, ignores the noise, and watches compounding do the heavy lifting. 20 years later, the second person has the life the first one dreams about. And the real shocker? The second person isn't a genius. They used a repeatable, emotion-proof plan that millionaires use to grow real wealth. Today I'll show you that plan so you can implement it this week. If you stick to the end, I'll give you the 3 mistakes that sabotage 95% of investors. Let's start with why this works. Long-term investing removes the 2 worst enemies of financial success: fear and noise. When you invest for decades, you transfer power from headlines to time and systems. Over time, small returns compound into life-changing sums. Emotionally, that's liberating. You stop reacting and start planning. Psychologically, this is huge. It removes the regret loops and the "I should've" stories. Millionaires don't wish for wealth. They build habits that force consistency, like automated investments and a portfolio that grows regardless of daily drama. That's not luck, that's design. Okay, the plan. I'll break it into 7 steps you can implement this week. Step 1. Define a clear long-term target. Not vague wishes. Aim for numbers and dates like, I want $1 million by retirement. Step 2. Build an emergency buffer first. Have 3 to 6 months of essential expenses in cash. This keeps you from panic selling during market dips. Step 3. Automate recurring contributions. Set up automatic transfers into your investment accounts the day you get paid. Make it invisible so you can't override it. Step 4. Use a diversified core portfolio. Think broad market index funds, a slice of bonds for stability, and a small allocation to higher growth assets. For most people, a simple 60-30-10 split of equities, bonds, and alternatives works wonders. Step 5. Rebalance periodically. When stocks run up, sell a little and buy what's lagging. This forces you to sell high and buy low. Use tax-advantaged accounts first. Step 6. Dollar cost average and increase contributions over time. Commit to consistently adding money and increase that amount when you get raises. The magic is in the habit, not perfect timing. And step 7. Protect your wealth with mindset and guardrails. Limit leverage, avoid emotional trading, and have written rules for when to act so you don't react emotionally. You asked for the 3 mistakes that crush returns, here they are. 1. Chasing hot stocks or trends. It's timing disguised as strategy, and it almost always fails. 2. No plan for withdrawals or taxes. People retire with a big number, but forget about the taxman and the risk of pulling money out at the wrong time. 3. Letting emotion drive decisions. Selling in a panic or doubling down on fear destroys decades of gains. Fix these, and you're already in the top 10% of investors. Here's what matters most. Time and consistency are your secret allies. The market will wobble, but your long-term plan will quietly build freedom. Imagine 10 years from now, having the peace to say, I'm covered. That future is built by the small, steady choices you make today. If this video gave you a new plan, hit like, it helps other people escape financial noise. Subscribe and click the bell. On this channel, we will walk together through every step. Share this with one friend who needs to stop stressing about money. I'll drop a worksheet in the description to help you get started this week. Use it. Thanks for watching. Your future self will thank you.